Hey traders, in today's video we're going to be doing some technical analysis on the euro dollar as well as talking about how to actively manage a position while a trade is in progress. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach at TradingPower.com, and welcome back to another one of my weekly Forex trading videos. We're going to jump right into things this week and let's go take a look at the euro dollar. Now, later on in this video, I'm going to show you guys some video recordings of the trade that we took in our live trading room and some recordings afterwards of me actively managing the trade. But first, I want to let you know why we decided to take this trade. Now, if you guys, I'm not sure if I did this on a YouTube video or not, but I know definitely in our syndicate program and in the live trading room, you're going to remember this because this is an opportunity that we had on our radar for a long time. Ever since price action broke out of this sideways channel, we've been looking for reasons to get long the euro. And our initial thought process, if I head down here to the hourly, was to look for a level right here. You can see price action broke and closed above our new structure highs. We put in a consolidation pattern and then we put in a higher high, higher close. So after price action did this, we were looking for the opportunity to catch a retracement, outside return, pullback, whatever you want to call it, and get long. Now you can see price action did exactly that. However, I did not get the chance to get long. So instead of throwing the trade away, instead of kicking the cat, we just patiently waited. Price action ebbed and flowed up, retesting previous structure highs here. And then we put in another new structure high. And all we did was repeat the same analysis. After a new structure high, we should expect trend continuation. If we're going to get trend continuation to the upside, and I'll show you a little bit more about the bigger prediction later. If we're going to get a move to the upside, or if we're predicting a move to the upside, the next question is how are we likely to get there? We're either going to go straight up, or we're going to retest structure first. And our thought process going into the day was if price action put in an outside return, retesting previous structure lows, then I'd look for an opportunity to get long. And that's exactly what we did. Now, if this is a little confusing to you guys, I want you to do this. Head over to our website, TradingPower.com. See if I can bring this over for you. Here we go. Click on the Learn to Trade tab up here at the top. That should take you to a page. It will take you to a page with lots of free education. There's articles, ebooks, quick hit training videos, Fibonacci's, but scroll all the way down and make sure you watch this into the gray trading session. This is going to teach you about how to read a price chart and really the same tools, the same simple tools and thought process that we use to execute this trade. Many of the traders in my live room, many of the traders that I work with in the 12-week transformation say this was the video that kind of shifted their mindset into how they should be thinking about trading versus how they used to think about trading. So make sure you watch this. But let me show you a video recording from, Wednesday's live room session of us breaking down the euro dollar and taking the trade. And then following that, I'm going to show you some videos of me actively managing the trade while it was working its way towards target profits. Oops, did I spoil it? Anyway, sit back and relax, and I'll see you guys in a little bit. Let's move our daily over here. All right, so look at that. DSR is primed and ready. If we're looking for a retracement back in the previous structure, you guys can already see where we're looking for price action to come to. I don't know why my candles are so fat. Need to lose weight, but we're looking for price action to return into our kill zone. Now, technically, our kill zone is from right up here, 112.43, to right down here. If we use the little trick we just talked about, what's another zone that we can identify? What would you guys say? Yeah, and Dim, I'm sorry. I wish we can spend a whole chunk of time training on this type of stuff, but again, this just isn't the place for it. So we do have to get the trading in here. I'm sorry. We have Monday sessions reserved for that, where we take an hour out and just no trading, just training, but during our live room sessions, we've got to look around the markets. Yeah, big green candle. So again, look at the big green candle right here. And you can say, well, here's a zone. And of course, this is when you go down to the lower time frames. Yep, got to make that money. Here's a zone. Yeah, involve yourself in the 12-week transformation course and get some training. Yeah, it's the best way to do it. I'm a little biased, but deservingly. Here's certainly a place we can look. But our kill zone is this big blue box, and now we have to do our best job to break down this kill zone and try to find the optimal entry or entries that can come in this area. So let's go down one more time frame to the 60. But I'll be looking inside this zone. Now, in this zone, I also have an even handle number. 112 even. We know what power even handled numbers have in the market, so we want to identify those. We also have our 1618 inversion, and we have our 786 extension in that area too. So we have a little bit of a Fibonacci cluster. Now you want on the 15 gives us another clearer picture. So if you're doing analysis on the 15, you can take this move right here and you can start drawing off harmonics, and you can start doing something like that. What a coincidence. Hits our same level. Now you can do a Fibonacci extension, swing high to swing low, because we do have that pullback, and that's going to give you that 1414 right in there. Let me know when War Room starts, guys. But now you can start adding influence if you're doing analysis on the 15. It's going to be the most things. I can see you're hungry. You're hungry to learn. You want to learn, and that's a good thing. But we have something called the CTS system, the Combined Technical Score System. And what that does is it gives you basically a checklist of things to look at in the market. And that checklist contains everything from RSI to structure to ABCD patterns to Fibonacci's to advanced patterns. And what the purpose of the CTS system is, it's a scoring system where each time you get something in the market, you would add up that score, which allows you to consistently execute trades that have enough for you. But the real gem of that system is making sure you analyze the markets the same way each time. So if you know that your CTS system requires you to look at ABCD, structure, Fibonacci, RSI, each time you enter the market, you're looking at those same things, and that's what's going to allow you to have consistent analysis. An example of the CTS would be right here. We have an ABCD pattern right here. We've got Fibonacci influence, and we can say higher time frame confirmation. So that would give you a CTS score of 4. Then it's up to you to kind of figure out, hey, how much do I need? What is the minimum requirement? Do I want to adjust my position size based off the score? Meaning, does a very low score trade, which should be a lower probability trade, do I trade a half a position size there? Where if we have an everything qualified CTS score of 13, now I enter a double position size because that's the best of the best, and allows you to play around with that. But the main thing is just looking at looking at the market consistently, time in and time out. That's the real gem. All right, we can just keep drawing fibs on here forever. It's not going to do anything. I'm looking for 112 flat. All right, we've got my Fibonacci zone down here already. We got my 786 and my 1618 inversion down here. We've got my ABCD pattern completion. I'll be looking for 112 flat for an opportunity to buy the euro. So anywhere between 112 flat and really 111.60s, looking for this trend continuation opportunity. Any questions about euro before we move on to the next pair? All right, so we're back here on the euro dollar. Remember, this was the trade we took this morning in our live room, and well, it's expanded pretty well. It came down to our potential reversal zone, and we're getting a shot back up. Now, we covered a topic a lot. This was a topic we did on Monday in our 12-week transformation live training session about trailing stops and kind of locking in profit. And once you learn how to trade, really trade management becomes the next crucial step that you can take to become more efficient as a trader. You're not necessarily going to increase your win percentage by that much. It will get better as you go on, as you get used to different situations in the market. But the key is to lock in as much profit as you can, while also leaving yourself exposed to the least amount of risk, but not doing it in such a way that you're not giving the trade enough room to breathe. And this is where I like for day trading, especially, this is where I like going down to the range bar charts. You can see here on the 15-minute, we don't want to look at price. Let's get this off here. You can see on the 15-minute chart and even on the 5, we essentially had a straight move up. We came down to our potential reversal zone and we had 1, 2, 3, 4, 5, 6, 7 out of the last 8 candles we're bullish, but this doesn't really give me any way to manage the trade. Now, if I were to go down to a range bar chart, you can see I get a more in-depth look at the market where price action gives me the different ebbs and flows that I would need to manage the trade. So this is one of the reasons I like looking at range bar charts. Again, it gives me a different perspective on the market. And in this particular scenario, it gives me a chance to reduce my risk on the trade, locking in some profit, even if we don't make it to that full profit area that we talked about. So if I have time, I'll keep you guys updated on this trade. But I think it's cool to kind of see how it evolves over time, how we went from our initial analysis to entering the trade to now managing the trade. All right, gang, we're back. It's about a little bit before 2:30 New York time, and just wanted to keep you guys updated on the euro dollar trade. I did one more video before this, or I'm not sure if I recorded it or not. We'll see when I get to editing, but essentially we're just tracking the euro from resistance level to resistance level. We got involved at the bottom, as you remember, and we're just going from decision point to decision point. And this is where it's key to know how to read a price chart, know how to determine significant levels of support and resistance so you can mentally prepare for the battle that's going to take place at this level. Again, the ultimate goal here is to shoot for that 113 even handle, a move really back into our resistance zone up here, but you don't want to be too greedy with initial targets. So we're looking for a nice psychological number here, but at the same time, we're just continuing to lock in profits. And this is something that I've been managing on the range bar chart. And as the market continues to ebb and flow, I'm just rolling my stop loss or see if you can see it here. Yep, just rolling my stop loss further and further up, locking more and more profit. So this started off as a trade that had about maybe 20, 30 pips of risk. I don't remember, but the point is right now, the worst case scenario is a 50 pip winner. And that's a good place to be. And that just helps you stay mentally focused throughout the trade. It kind of, obviously it takes the fear away from being stopped out, knowing that you cannot lose money, but it also takes the kind of the fear away of taking those profits early. Because a lot of the times people don't take profits early because they're greedy. They take profits early because they're afraid that price action is going to reverse direction and stop them out for a loss. So having profit banked in, knowing that the worst case scenario in this trade is that I make money, is it's kind of like playing with house money at the casino. You've made yours no matter what. Now you can finish the game out. Probably a bad analysis or a bad analogy, seeing how we always want to separate trading from gambling, but I hope you guys get the point. You want to put yourself in a position where you're mentally stable. That way you don't make trading mistakes, because we know if you make trading mistakes, that's a very easy way to sabotage your trading, sabotage your account, and really sabotage your future in trading. Hey, just came back, guys, and saw the good news. Euro dollar did roll up to our 113 level, or right below it. You guys know we front run orders, so was able to get out for about 110 pips on the trade. Now in the syndicate, we do one in, one out, so which means we're only taking one target. But I know for my personal account, I'll actually be trailing this a little bit longer. After all, we are still in that trend continuation phase here on euro dollar. I'm just bringing it up on a daily, where we're expecting the market to continue up a little more to our potential either structure level up here or our bat pattern completion up at 113.85. So maybe I'll do some more analysis for you tomorrow if anything cool happens in the live room. But a good trade. You guys got to kind of see the thought process and the management process of how I go through it. And well, we're able to make some pips off it as well. So that's always a plus. So see you guys next time. Looking at the euro dollar real time, I'm back on the daily chart. Now you can see the breakout that we had of that consolidation area. And at quick glance, it really looks like the market isn't really doing much. We have swing highs over here. We have swing lows over here, consolidation in the middle, and the market really hasn't made up its mind on which way it wants to go. Now, hidden within this mess is actually a very high probability trading pattern, trading strategy, and it's going to be called a bat pattern. If I go ahead to my indicator list, if I bring on my constellation pattern recognition software, you're going to see that we have a bearish bat pattern completing right at 113.83. So I'm recording this at, what is it? It's Thursday, about 12:30, 12:45-ish right now. There's a good chance that this will be filled by tomorrow. So if you are an advanced pattern trader, if you trade on the daily time frame, this is the next opportunity that awaits you. Now I'm going to be holding the remainder of my position. We did one in, one out on the syndicate, but in my personal account, I will be holding. There we go. The remainder of my position to see if we can retest the top of our X leg up here at 114.77. Aside from that, I don't really have any real reason to think that price action will go higher before getting some sort of retracement. So I'll look to take maybe not the remainder of my position off, but the bulk of my position off at that level if we can get there, and then see what price action does at that decision point. But again, advanced pattern traders, bat pattern traders, daily time frame traders, you have a bearish bat pattern completion looking at 113.83. That will be the next opportunity to get short on the euro dollar. So hope you guys enjoyed this. If you do, give it a like, give it a share on social media. Again, I'm still trying to reach 25,000 subscribers for the year. I'm a little behind pace on doing that, but if you guys step it up, if you keep showing energy and sharing and subscribing and encouraging other traders to check out this video, I have no doubt that we'll be able to accomplish that goal. But until next time, plan your trade, trade your plan. Live room members, no live room tomorrow. Syndicate members either. You won't see me active on the trade floor tomorrow. I'll be in the Big Apple all day, New York City, but I'll be back next week. And until then, plan your trade, trade your plan. Best of luck in the markets as we close out this week. Yep, yeah, we got orders on for pound dollar. Yep. Previous resistance comes into support. So this was a level that was resistance, right? Boom, hit, rejected. Boom, hit, rejected. Boom, hit, rejected. Boom, broken, right? We can anticipate what? The same thing we always see, right? The same thing we always see. A move back in the structure and a continuation. I mean, look, you guys remember this right here? Give me a yes if you remember the analysis on this level right here. Look, same thing. Retracement, extension. Doesn't mean you're always going to get a chance to enter it. And that's the big thing where people get upset. Like, oh, well, how, I didn't get involved, so it doesn't work. Well, no, that's not the point. The key is that you're working on your analysis. You'll always be able to fine tune your trading and find a way to get in there. It's got to become more aggressive if you want to catch every move. But the key is to fine tune your analysis. I would put more, I would reward yourself more, guys, for making a right prediction than actually being in the trade. I know that sounds crazy. The internet is going to hammer me if I post this live. I'll have to edit it out for my own safety. I will have to edit this out for my own safety. But I believe that you can get more, especially for the level of traders that you guys are right now, for the majority of you. You can get more out of being right in these predictions than actually making money. Because guess what? If you're right in these predictions, what are you going to start doing? You're going to start gaining confidence in yourself, right? If you see this and you predict it and it happens, you're gaining confidence. You're believing, oh, wow, maybe this stuff is right. Maybe this outside return magic it works. And then when you do trade live, guess what you have? You have that confidence so you're not making those emotional mistakes. You have that confidence so you're not moving stops back and taking targets early. Because now you feel comfortable. You know that if you get fouled with 2 seconds left on the shot or in the game, you're going to go to that foul line and sink that shot. And in the long run, that's what matters. No one thinks about the long game. We're tuned to want instant gratification. instant gratification lasts a little bit of time, right? We want longevity. We want to be consistently profitable over time. Tortoise in the hare, guys. So that little rant aside, I'd be looking for a retest of structure. We are back. And yeah, I'm pretty great. Pretty awesome. But no, that seriously, that is the cool thing. If you noticed, I'm not sure how many of you have been in the syndicate for how long, but it really is like that. And that's kind of the beauty of, it's one of the beauties of trading different strategies. I always talk about, you guys should start off with a single strategy and master that one strategy. That's true. But I think as you go on, you should, like any investment, you should diversify your portfolio. And one of the beauties that we're seeing in the syndicate is Jason and I do have different styles. Now, obviously, Jason was my mentor, is my mentor, was my coach. So I trade very similar philosophy to his, but we are slightly different traders. And what you'll notice is that I was having a hard time to start off the year, and he was on just a brutally vicious run. He was just destroying the markets, just beating it to death each and every week. And over the last week or so, he's cooled down some, which is expected. We don't just win forever. I'm not going to sell you a dream. I'm sorry. It doesn't work like that. But the beauty is, when I was cold, he was hot. Now he's a little bit cold, and I'm having a pretty good, decent run over the last few weeks, and it balances each other out. And what you don't get from that is you don't see the massive returns. Maybe only a few weeks a year you see 10% weeks or anything like that. But you don't see that on a regular basis. But you also don't see the massive drawdown. You just see a slow, consistent, boring drive, right? A boring drive in the right direction. And it scares a lot of traders off, because many traders, they want the big returns. They see the stories of glory on the internet about 20% weeks and turning $500 accounts into $1 million. And, you're not going to get that with us. I'm sorry. You're not going to get that with us. What you are going to get is you're going to get a way to make consistent profits over time. And if you implement a good money management strategy with that, you're just going to increase your returns as your account increases. But I'll tell you what, that's the key to longevity in this industry, because those traders that take their account from $500 to $1 million in a year, they usually don't last more than a few years. Just being honest with you. So, long-term results, right? Long-term results. Guys, we need plan, because I lost. You see, this is all emotional because I lost 2 this morning. So you're going to skip a winner? Huh? What if you lost 2 this morning? This rallies up. It does exactly what you expected it to do. All of the hard work, all of the analysis that you did to the market, and it does exactly what you expected it to do, but you're on the sideline because you were scared. You could have made up for those 2 losses and some, but you didn't take it because you were scared. Guys, you see why so many traders fail? It's stuff like this. It's not the inability to do analysis. It's not the inability to do analysis. You guys can analyze the market. You guys can read a price chart. It's those stupid emotions that get in the way. You sabotage yourself by either not having a plan. And when you don't have a plan, you make emotional decisions. When you make emotional decisions, you're not consistent. When you're not consistent, you don't consistently make profit. You're just gambling. How do you turn off your emotions? Easy. You develop a 100% belief in what you're doing. We talk about back testing a lot. It takes a long time to develop rules of engagement, back test those rules of engagement, tweak those rules of engagement, back test those rules of engagement again, forward test those rules of engagement before trading it. But if you do it the right way, if you go through the process of learning how to trade the right way, you should have a 100% belief in what you're doing. Now, those emotions are still going to get involved, right? I'm not saying you're going to be emotionless, right? I still have trades where I'm like, what was it, the pound? I I won on a pound dollar trade last night on a cipher that I did not want to take. I'm looking at it. I'm like, I think this pound is going to go south. But I took the trade. So those emotions are still going to be there. But if you have that belief in your system, if you have that belief that if you consistently execute your system over time, right, it's going to help avoid those emotions. But you need concise rules, because if you don't have clear, concise rules, then those emotions are going to get involved. And when I'm seeing you tell me like this, you don't have rules to trade this. You're like, well, if this happens, I'll do this. But sometimes if this happens, I'll do that. Well, maybe it needs this, but no, but this isn't big enough, but that's too small. And you're giving me all those excuses. Why? Because you don't want to be in the trade. You don't want to be in the trade because you're scared. So you're making up any reason possible not to get involved. Am I right? Did I nail it? Yeah. Guys, I've worked with thousands of clients, hundreds of countries. There aren't too many differences in struggling traders. They typically, all the flaws typically lie in the same area. You guys aren't alone.